Welcome back to Market Pulse, the podcast that's not just about following the market, it's about mastering it. Are you ready to transform the way you think about investing and finance? Whether you're getting started with your day, powering through the midday hustle, or relaxing as the evening sets in, we are here to fuel your financial savvy and keep you one step ahead. So plug in, tune out the noises, and let's get ready to ride the waves of the financial world together. Today, we are thrilled to have a special guest, Ms. Shanika Gunasinghe, Assistant Manager in the Corporate Affairs Division at the Securities and Exchange Commission. Shanika is a chartered accountant with a strong foundation in the financial sector, bringing over 7 years of experience. Her expertise and fresh perspective are sure to provide invaluable insights into the world of market regulation and investor protection. Happy to have you here at the Market Pulse. Shanika.
Thank you, Ravisha, for inviting me.
Before we get into the specifics, let's start with something fundamental. Fully accurate, timely, and comparable information. Shanika, we often hear that this type of information is essential for financial markets, regulators, and investors. Could you share with our listeners why such information is particularly important for investors?
As an initiation to the discussion, I'll start in this way. The capital market is an essential hub for the country's economic development. It is the place where funds are created to businesses for them to grow up. The investors are the ones who provide funds to these companies. The SEC, as the main regulatory body in the capital market, plays a vital role in terms of meeting its objectives stated in the SEC Act. One aspect of the objective is to create and maintain fair, orderly, efficient market. The other aspect of the objective is to protect the interest of the investors in the market. In order to build the investor confidence while ensuring that investors are receiving accurate and timely information for them to take informed decisions, we are there to serve those purposes. The investors uses several sources for them to take investment decisions. It can be annual reports, quarterly financial statements, market announcements, prospectus, circulars, newspaper articles, etc.
Speaking of information quality and enforcing standards, the SEC conducts a financial reporting review program aimed at enhancing the quality and financial reporting among listed companies. Can you tell us more about this program and its impact on the market?
Moving on to the role of the SEC, we are reviewing the information contained in the annual reports, interim financial statements, and market disclosures, as these sources are referred by the investors to take in decisions. The public listed companies are required to prepare their annual reports, interim financial statements in accordance with Sri Lanka accounting standards as well as Colombo Stock Exchange listing rules. When it comes to the Colombo Stock Exchange listing rule, it mandates the companies to follow number of disclosure requirements, which is called as content of annual reports and interim financial statements. On the other hand, the Sri Lanka accounting standards guided for recognition, measurement, disclosure of events and transactions which are attributed to the companies. It covers both financial and non-financial aspects. At the end, the companies has to ensure that their real picture is depicted through the financial statements. When it comes to the independent auditor's report, it is a much important report for smarter investor. This is the document in which an independent party provides an opinion about the true and fairness of the financial statements authorized by the board of directors. Not only that, the independent auditor's report highlights the key matters, sensitive matters where the investors has to pay their attention when taking the decisions. With the implementation of the sustainability reporting standards, the companies are taking number of initiatives in economic, social, governance aspects And also they understand their wide responsibility to the society at large. On to our role as the regulator, we encourage companies to adopt these practices. Further, we follow up with the companies to release their annual reports and interim financial statements on time. If not, the value of those information will lose to the investors.
Given that investors rely heavily on accurate and timely information, Shanika, the role of SEC becomes incredibly significant. Could you explain how the SEC ensures that investors are provided with all the material information they need to make informed decisions?
It's a good question, Ravisha. There are a number of requirements that the companies has to adhere and comply with when making disclosures to the market. Let's assume if there are significant events and transaction happens in a listed company, so then they are bound to make an immediate market announcement to the market as per the Colombo Stock Exchange listing rules. However, in several occasions, what we have experienced was certain companies are not making those market disclosures. Some are making disclosures, but it is with a delay. Certain companies, they made market disclosures, but important information are missing in the content. In such kind of a situation, we take number of enforcement actions against them, that is to discourage these kind of misleading practices. On the other hand, let's assume a company wanted to raise funds through the market by way of issuing securities. So the companies has to issue a document called prospectus or a circular. The Colombo Stock Exchange reviewing the information disclosures contained in these documents, and they ensure that the investors' interests are protected, while serving for the purpose of facilitating the companies to raise the funds to meet their objectives. Also, we have to ensure that none of the party will make an undue gain. Moving on to the role of the board of directors in a listed company, they are the ones who manage the affairs of the companies on behalf of shareholders. Let's assume in an event where the companies are in a problematic situation, so the companies are subjected to enforcement actions depending on the specific circumstance. The companies may transfer to watch list or a second board. In a situation like that, the listing rule prohibited board of directors to trade their shares until they move out of the watch list. That is with the view of protecting the interest of the investors. And also, then the board of directors are keen about their responsibility. Not only that, on the basis of having price-sensitive information in the hands of board of directors, there are a number of restrictions are placed on board of directors. They are trading. All these steps are taken to ensure to protect the investor interest.
A massive thank you to you, Shanika, for sharing your expertise. Your insights have added a significant pulse to our discussion. And to you, our dear listeners, thank you for tuning into this episode of Market Pulse. We hope you've gained valuable insights that will resonate in your financial endeavors. Remember, the market is a beat that never stops. Until then, keep exploring, keep learning, and always keep your pulse on the market.